welcome, Bryan, to the Creating Connection. Glad to have you, Bryan Clagett. For those who don't know, fintech entrepreneur. Why don't you tell us a little bit about what you have been up to lately?
What have I been up to? Okay, it's more like what haven't I been up to? So when Gizio sold to Jack Henry in 2018, I started working for Strategy Core. I still do a little work with them. I retired for 15 minutes. My wife didn't want me to retire. I
can see that.
Retirement's not in me, right? You know, you and I are both the same, Sarah. We like to work. You know, we enjoy people. In 2019, Brett King approached me, asked me to come on at Moven as an advisor and help Moven do what we did at Gizio, which was in 2009. Really, Gizio did the pivot from a B2C to a B2B. So Gizio had already started doing that, and Moven already started doing it. So I came in at both at the right time. I didn't want to do full-time, but I became full-time in 2020. I'm CRO and run strategy for Moven. Rich Radice is our CEO. Brett is a board advisor now. We've had some changes with the board. Brett's still very involved in the company, obviously still an investor. So I work a lot with Brett as well. Brett's actually in Saudi Arabia right now. But I've also been investing in other fintechs. I got involved in a company called Blip. I'm a little involved in a company called Upswat. There's a whole bunch of companies I'm involved with. ChannelNet, for example, AutoLink, which is Ed Bourgeois' company down in Louisiana. Any company that's making a difference, I like to be involved with. So I'm doing a lot, but Moven takes up about probably 70 hours a week of my time, which is enjoyable.
70 hours a week.
It's about 70 hours a week on average. Yeah. I'm on vacation right now, but I always have time for you, Sarah. So, I mean, it's, so going from like Gizio, which was US based PFM, into financial wellness around the world, that's been a ton of fun. So that's what I've been focusing on, is really that global aspect. So I've actually done some consulting for small projects for a variety of companies, including companies in London, and companies in Southeast Asia. So what have I been doing? Just keeping really busy and having fun.
Yeah. And for those who aren't familiar, explain a little bit about what Moven Bank is.
So it's no longer Moven Bank. So it's Moven Bank started around 2013, depending on who you talk to. And it was a challenger bank, or what I like to call a neobank, like Simple. It started about the same time as Simple. There's always been a question as who did it first. It depends who you talk to. It doesn't really matter. Simple, was absorbed by BBVA and ultimately by PNC. It no longer exists. Moven struggled as a neobank. It actually was a neobank before its time. Great idea. I applaud Brett for the model. So we slowly but surely, TD Bank out of Canada said, we like what you're doing there with helping people save and bringing financial wellness to the top of the digital banking experience. How can you do that for us here in Canada? So that was the first client, and then Westpac in New Zealand kind of did it. And then in 2019, when I was asked to get involved, I was like, well, how do we do that at scale? What else can we do? So we actually take a PFM kind of product. We call it financial wellness, and we can deliver that via SDK API as an integrated model, so we can compete against a Gizio or compete against an MX if need be, but in a different format. And instead of our product being tabbed and buried in the digital banking or online banking experience, it's at the top. So when you pull up an app, right off the bat, it's like, hey, Sarah, your spending's on track compared to last month. Or, hey, Sarah, your latte expend is out of control, $14,000 last month. You're over caffeinated. So rather than saying, hey, Sarah, set up a budget, we're just saying, we want to keep you financially woke. Make sure you see how your spending's going. Banking increasingly is done in the form of glances from the consumer. Nobody loiters on their app. No one loiters online banking. No one wants to even be there. You do a little quick glance. Am I safe to spend this money? I wonder how much I've spent. Maybe it's a household issue. Has Brian's wife, Amy, gone out and bought another Louis Vuitton? It's all right there. Or did Brian buy some more hardware for the river house? It's all right there, kind of transparent. I think that's what financial wellness is going to increasingly be more about. It's like, keep me in tune with my money. Let me know give me some hints on things I could do to change my spending habits to have a positive impact. And I think banks and credit unions and fintechs increasingly are doing this. We do that for banks around the world. We've also partnered with BaaS providers like Q2 Helix and Synctera. We just did a partnership with Solid, which is a new BaaS provider. And fintechs are coming to them saying, can you build us an app experience? We have an app experience that we built for TD and Moven Bank. We've modernized it. So sure, we license that app experience and we put financial wellness in it. So the BaaS provider gets all the revenue that's oriented to BaaS. We get the revenue that's related to financial wellness and driving the experience. And then we partner with the KYC providers for the onboarding. Well, we've got Fidelity Bank on board. We've got Tip House most recently. We just signed a company called Wanted Debit. We signed 6 or 7 deals this year, which is, in effect, we've doubled the size of the company in the last 12 months.
Wow.
So.
Well, and that's seems to be a trend, at least here in the US, that I'm familiar with it. And I've done some work internationally as well, particularly in Australia for some reason. But yeah, I feel like, what do you see as the differences in attitudes toward financial wellness around the world?
Well, I think there's a similarity in the sense that, everyone agrees that they need to be more, bankers are telling us that they want their customers more dialed in to money. And at the same time, all the bankers around the globe that we talk to say, how can you take the data and the insights that you get from learning about how Sarah or Bryan or somebody in Japan spends their money and turn that into something actionable? In other words, if I see what you're doing, can I give you a message that says, hey, Sarah, we see you've set up a goal for a new car, or we see that you're over caffeinated and love Starbucks. Here's an offer just for you. So that's a common denominator around the globe. They all agree that financial wellness is something that can be more tangible, and that there's insights that can be delivered from it. The other thing that I see a lot of interest in is from the government. So in Indonesia, for example, the government is really enticing the bankers to get closer to the needs of the consumers in their country. The consumers that are in the rural communities, the consumers that are in the cities, that underbanked or unbanked, depending upon who you're talking to. How do we reach them as a banker? I see that in conversations we've had with Turkish banks, for example. I've seen that in UK financial institutions we've talked to. They all want to reach a broader audience and serve a bigger purpose, and the governments are very supportive of that. So that's a common denominator. The difference that I do see is, for example, in Japan, talking about money is something that's kind of taboo. Maybe taboo is the wrong word, but it's not something that's openly done. In the United States, we're always competing against the Joneses, the next door neighbors. The neighbor bought a 7 Series BMW. I need to buy an S Plaid, to one up them. In Japan, they're very conservative. They don't do that. So talking about money openly is not something you do. So fintech as a whole has had slow adoption in Japan. They're probably 7 years behind the US. And so those cultural differences are something that I have learned to appreciate and have to kind of distinguish. I've got a call with Banco Antalita, El Salvador, in about 30 minutes or 40 minutes, and they're Bitcoin based, right? It's like that's the new currency of the government for whatever reason, and it is exciting. But that's creating a whole different kind of approach. And then we've got them already as a client in Honduras, and Honduras is not Bitcoin or crypto based. So again, different cultures. And in those markets, bank distribution looks a lot different. The local bank could be, and even in Indonesia, the local bank could be a guy on a moped. In Bank Central Asia, some of the banking's done through what they call agents that go out to the rural communities in their vehicles and engage customers, on a street corner. And they want to change that, and they want people to use, more and more digital and more of a mobile first approach. And that's the other common denominator. Regardless where you're on the world, mobile is where the energy is going right now, and turning that, mobile activity into something that I can actually monetize as a banker or as a fintech.
I had a conversation not long ago with a community development financial institution certified credit union in Florida. And, one of the things that they were challenged with, you can serve people through mobile if they have Wi-Fi, if the internet is any good. And so that, at least in the US, that's been an issue in the rural areas, where there is probably, I forget the stats, but as much perpetual poverty as there is in the cities.
Yeah, that's a great point. And I know in the rural communities here in Virginia, broadband's catching up. So there's been an initiative, there's federal grants that have trickled down to the state and to the counties to see that happen. One of the counties I live in is Matthews County, Virginia, on the coast, and there's a lot of communities that have no Wi-Fi. They rely on Starlink, which is making a difference, in many ways. When I talk to the people in Indonesia or Turkey, for example, same challenges. But their governments are very supportive of pushing that broadband out in the rural communities. Look at Africa and the mobile economy that exists there. You've got so many entrepreneurs in Africa, and that's spawned a ton of fintech payment startups, for example, because these geographies that have been unbanked or undigitized are getting digital now, and it's driving a new form of a digital economy. So worldwide, I'm seeing broadband expand explosively. I think we're going to fill in the gaps. I think there always will be some level of holes that are uncovered, but with the Starlinks and satellite comms, I think those gaps will shrink rather quickly. Yeah. I mean, digital is our friend. There's zero about it. And COVID has benefited us in the sense that digital has become the forefront of many of our, regardless of the industry in. It's the forefront of our strategy increasingly.
Oh yeah, absolutely. And well, and they're getting back to like the rural areas and the CDFIs. For example, this credit union was trying to put ITMs in different areas. The next level ATM, if you will, because people didn't always have access to mobile. But even that, I mean, you got this little CDFI that already has, whatever financial challenges that go along with being a CDFI and the financial wellness that they need to provide to members and the access and all that. But it costs them, a huge chunk of change just to get the cash out to be replenished, because nobody else has an ITM or an ATM out in that area and that kind of stuff. And so, one of the things, I feel like one of the things you often talk about is the decommoditization of banking. And of course, providing service like that, whether, you're capable to do it through mobile and through different technologies like ITMs and things like that. But that comes at it can come at a huge investment. And I feel like one of the biggest threats, of course, number one threat I feel like to credit unions is sharing their story well. But one of the second is the technology and finding the partners and knowing of the partners who can help them do these things. What are your thoughts on that, on connecting?
I agree 100%. I use a terminology here called fintech Sherpa. I think that these smaller financial institutions and these fintechs that are kind of coming out of nowhere, that are in some cases underfunded, or maybe they're well-funded, they're looking for technology providers that can help them connect the dots. Unlike the core of yesterday, I don't think there's going to be any single technology provider that can stand up your full financial institution and give it a robust experience. You're going to have to work with cores and technology providers that know who to bring in, that have the best competencies and the flexibilities to deliver services affordable. So you, the small community-backed FI, can literally afford. Banking is highly commoditized, as you mentioned, and you hear me talk about, with very thin margins. And I don't know why anyone would want to be a banker in today's market. It's so difficult, right? It's getting a little better maybe in some regards, and there's certainly a need, but it's a tough business to be in. So, I definitely could see technology providers stepping up the game and being more aggressive in how they price in order to capture some of those, I'll call them underperformers or overly ambitious startup financial institutions that are trying to make a difference. If you're a fintech that is, or a technology company that wants to make a difference in the industry with these, you can do it. You can find a way. There's a lot of flexibility in the way even in how Moven prices today. I'd love to talk to some of those organizations that have those challenges and help them find a way to make it happen. You know, we've got a vast network, and between you and I, we know a lot of people. We should be assembling the people that can roll up their sleeves and help these people deliver products and services to the people that need it most.
Yeah, so and I think this applies for financial institutions and particularly credit unions because of the philosophy, but also for yourself. How do you decide on fintech partners? Like how do you decide to invest? How do you decide as an institution? You know,
Yeah.
if you
Well, I
want
know
to
personally, for me personally, when I look to invest in a fintech, I'm looking for an organization that has one singular competency that's very strong and could fit into maybe a broader ecosystem. And, you know, that they've got a piece of the ergonomics of banking, as I call it, that can complement other pieces. It could be, you know, adding value to a core, like a Jack Henry Banno. You know, the Banno acquisition by Jack Henry is one of the best acquisitions they probably did, even better than Gizio's acquisition, in my opinion. But it was brilliant, right? They hired competency, they hired new technology, hired new thinking. So there definitely a lot of ways to do that. But I look at organizations also that are willing to collaborate. They're not just willing to solve, you know, or sell their solution. They want to back them and say, well, what is the problem we're trying to solve? How can we be a part of that? And who else should we be partnering to do it? I think that's where that whole BaaS environment's gotten kind of interesting. The bulk of the BaaS providers out there, especially Synctera, when I look at them, they realize they've got certain competencies, but they've got to bring in stronger bill payment solutions, P2P, financial wellness. They got to bring in organizations that have a lot of flexibility. And that flexibility translates into collaboration with the client, the banker, the fintech, to help that banker, fintech solve their particular problem. All banks are not the same. All credit unions are not the same. All fintechs are not the same. They all serve increasingly different niches, and they all have different needs. And in some cases, they all have different levels of handcuffs because there's only so many things that they can do. Reach is limited, capital is limited. So you want that really collaborative. So again, for me, it's like, where do they fit into a broader ecosystem? How do they complement other partners or other components of the banking experience? And from a psychological or from a engagement level, are they highly collaborative? In other words, they're not going to be a vendor to the client. They're going to help the client solve a problem. That's why I like working with people like the Jill Castillas of the world. You know, again, I'm using a banker as an example, but they're there to solve a problem. It's like when she went out after the PPP loan and Mark Cuban, that whole thing, they had a real problem, and that was, we've got a need to get money into the hands of the small businesses, the SMEs. And Mark Cuban put a tweet out there. I'm like, you need to deal with a collaborative banker. You ought to be talking to Jill Castilla. And then she got Tesla involved, and they solved the problem. So that's the kind of stuff I look for, where you're highly driven, motivated, collaborative, and you've got pieces of a puzzle that can be put together. And again, I'm going to use the cores as an example. Traditionally, that's not how the cores have thought. Yeah. Some of the modern cores, like I look at Thought Machine, for example, they do think that way, you know, and they bring all the pieces together. Same with the BaaS providers. And increasingly, you know, that's another reason why I like Jack Henry. I think they're looking a little broader. They're putting all the pieces of the puzzle together. Banking is literally not something that's got like these parameters around it anymore. It's changing, it's evolving, and the thinking behind it's got to change as well. It's not just people like me or you or a CEO of a bank saying, let me go find innovators for the sake of finding innovators. It's innovators that can solve a problem and are open to explore other relationships, even if it means, you know, forgiving a little revenue. You know, you can't be that kind of vendor that says, I want it all. It doesn't work. You know, you'll never distinguish your experience.
I think some of the legacy cores are starting to learn that.
They are. They're learning it the hard way, you know. And same with the online banking industry. You know, the online banking industry's got to open up. They got to remove the barriers. And the more progressive ones are, and eventually they all will. They all will.
And I think too, it's also forcing the move to cloud for simpler connections. And despite the recent not so great news in the Bitcoin community, but also just the advancement of blockchain technology. I was telling, you know, I sit on the board of my credit union, and I was telling our we were talking at the board meeting, and I was talking to our management about, don't think about the crypto aspect of it. Think about the technology that's underneath it. And there is a lot it could negate the need for so many vendors, so many different business vendors and stuff. There's just so much, and make everything more efficient. There's so much technology out there, but not everybody, very few are willing to make the leap, right? They aren't comfortable with cloud, or they want a hybrid, or they don't want any cloud, or they, there's oh goodness, and I'm going to blank on the credit union right now, but there's a smaller credit union, 100 and so million in assets, that's using blockchain right now to perform its wire transfers, because it's so much cheaper to do that, because they're a border credit union. It's so much cheaper to do it that way. Becky Reed, Lone Star.
Okay.
Yeah.
I didn't know that about them. That's something. That's a big accomplishment.
It is, and they're not huge. They're just how do this is like a whole cultural shift, though, of how you think about technology in a more strategic sense, rather than let's place an ITM here. I mean, yes, that is strategic, but what kind of investments do we need to be making so that we have the technology for the next step, the next leap forward?
Well, I'm with you on the Bitcoin example you provided, because I am a believer in blockchain and the underlying technology and what it can do, and the whole concept of the ledger that can be created to it. The accuracy, the efficiency that comes with that becomes much more flexible and scalable over time. And then you got the other extremes where you got countries like El Salvador saying, let's make it our official currency. God only knows what their losses are to date. I don't view it as Bitcoin or crypto as investment grade at this point. It's vastly unregulated. Today we got Sam Bankman I think he's going before Congress or the House today, probably in handcuffs, based upon what I read last night. But there's something to be learned there. I do think crypto is going to be in our future. I do think virtual currency is a real thing. I think what wrecked it was lack of regulation and overhype, and a lack of focusing on the underlying technology. There are companies out there like NYDIG and Ripple that they kind of understand that. They're not about the coin itself. They're about how do you manage it? How do you acknowledge it? Even financial wellness companies like us, we've got the ability to bring in and study your crypto assets. Crypto, regardless of the kind of coin you have, it is an asset, no different than a car or a home or gold or silver or platinum. I should, as a financial institution, understand how much Sarah's got or Bryan's got in crypto, because it impacts financial wellness and how you as a financial institution or a fintech kind of engage with me. So it's something we have to reckon with. I don't think we should be all jumping into it and saying, hey, we're going to have a virtual coinage next month. We're all going to be issuing NFTs in the next 2 years. We don't know, but let's focus on that underlying technology and the efficiencies that come from it. But it's exciting to watch, and I think we're going to see a lot of regulation come out of the next several months. There's no doubt about it.
Well, yeah, and it's going to need. I mean, one of the things I think is kind of interesting too is the concept of the stable coin, like tying it to something that is more tangible, or the idea that credit unions or bank executives understanding that it's not that whether you're in it or not, you're in it, right? Because they're using your debit cards or your credit cards or whatever to buy the crypto, so it would behoove you not to ignore it, right?
Yeah, it's definitely something. It's consumers increasingly, especially the younger ones, are going to be talking about it. It's not going to go anywhere. We're gonna cut through all the chatter and all the noise, all the spam that's built around Bitcoin and some of the other coins and NFTs, and we'll get through it. So, and Web3 is going to continue to evolve and have an impact on it, and DeFi and all that. So we have to keep an eye on it.
Yeah, absolutely. But and that kind of technology, also getting back to the financial wellness issue, allows you to have it helps you to have all your pieces in one place, right? All the pieces of your financial life. so that not only can consumers have that a little bit of feeling of financial empowerment, especially, in times of economic distress right now, globally, really. But also getting back to the point of personalization too, that you mentioned, allowing the institutions they do business with to have that comprehensive view of who they are and what they do, not only helps them better serve those folks, but also helps them better compete against those who aren't advancing that way.
I got into banking in '86. I went to work for Core States Financial out of Philly. And back then we talked about relationship banking, how we wanted to be the advocates of the customers we served. Then in the mid to late 90s, we went to Affinity, John Fenton's credit union, working with Mark Cochran, who's now Jeanne d'Arc, Dave Snodgrass, who's now CEO at Lake Trust. And we talked about advocacy then too. We want to be the advocate of the members we serve. We all want to do that. How can you possibly be an advocate of anyone you serve? I don't care whether you're a bank, a credit union, an SNL, or a fintech. You can't be unless you understand holistically what that household has or owes. You cannot be relevant and contextual to them without that full picture. My bank is a $25 billion bank. I do have a credit union relationship as well, and I won't mention who it is right now because I don't have anything nice to say about them, nor do I about my bank, which is Atlantic Union, here in Virginia. A big bank, investment-wise, doing great. I within like days of selling Gizio, I got an email that said, "Have you considered, Bryan, setting aside money in an IRA?" All right, first of all, I was 58 years old, so if I hadn't considered it by then, it was pretty damn late. Second of all, you should have seen what was going on. You saw transactions in the account because that's where my pay came in and that's where my payout came in. Nothing. They never put the two together, completely irrelevant. They never look at the household balances and what we have there. I also got recommendations, and I still get them every couple of months, that I've set aside money for a 529. My daughter's 25 and works for Ripple, making six figures. My son is out of ECU, works in supply chain, does extremely well. And they both have accounts there.
Right.
And they're still recommending that I put money aside. So $25 billion financial institution is completely irrelevant to me. It's actually causing me to look at, a different bank. I'm now, or credit union, I'm now fed up with the fact that they're irrelevant. But you cannot be an advocate unless you understand where your people stand. And you need to understand their emotional connection with money as well. Money leads to an awful lot of stress. And it's probably the leading cause of divorce. Maybe I'm assuming that. I think I read that somewhere. I know personally when I have an argument with my spouse, my wife, it's typically about something I spent or she spent. Why'd you do that? How can you go out and buy a lawn tractor if I can't buy a new Louis Vuitton? Well, I don't quite understand the argument, but I have to put myself in her shoes, and I get it. But I mean,
Louis Vuittons, yeah.
money's about tension. It creates a lot of tension, And financial well-being is something that should be, very important to everybody that we serve. Years ago, I was working with Evan Clark at Department of Commerce, Federal Credit Union.
Yeah.
Great guy, kind of a nut, and I hope he's watching this because I have a lot of respect for him. I remember him saying that their goal as an FI was not really to be the advocate per se. He would say, our goal is to help people live well within their means. I love that. Your goal as a banker or a credit union is not to make everyone rich. Your goal is to help people live well within their means, to live comfortably, or to take some of the stress out of finances and money management. That's how you can differentiate in this country, and anywhere in the world, from a banker's or fintech point of view. And that's the messaging behind a Revolut, the messaging behind a Chime or a New Bank or a Monzo. Some of the hotter properties, or Dave is another fintech I like. Their messaging's on point. And their app experience or user experience, as they say, is fairly on point as well. Banks need to, again, and credit unions need to think a little more holistically about where do they fit in, and do we have a good comprehensive picture of how somebody is doing what they hold. And again, it goes back to crypto. If I'm a younger household or even a wealthy household that dabbles in crypto, I should probably know that. I cannot be an advocate unless I have that full picture.
Yeah. Well, and credit unions and banks also, you were talking about the brand messaging a minute ago, and being about the holistic financial wellness, yet so many so many ads, 599, 49, whatever your rate is. And I'm like, yes, that matters, but you don't see the and I would say it's the majority, it's not all, but the majority, you don't see a really holistic brand message,
Right.
focused on the consumer. But
Well, and again, the average consumer is not looking for a new bank, I don't think, right? And switching banks is a royal pain in the you know what. I mean, again, I'm considering that, and
I was gonna say, solve that problem.
yeah, I mean, I even said I went to Chase yesterday, who just came to our market here, and I've got a Chase business account, and I got a Chase business card, and I was like, maybe I'll give Chase a chance for the bulk of my day-to-day banking. And I was like, do you have any process that can help migrating the accounts from Union and from my other financial institutions into your account? Well, not really. You're gonna have to do it on your own. I'm like, God, what a nightmare. That's going to be such a chore. So it's not anything I'm looking forward to do, and maybe I'll procrastinate and never do it. But yeah, what's happening now, because rates have increased and there's more opportunity to drive margin, and the banks need the margin, there's no doubt about it, is we are falling back into the commodity trap that we entered in the late 80s and early 90s, when rates were the competitive advantage. I was running a portfolio for Summit Bank. It was a liability portfolio, about $4.5 billion in CDs and time deposits, as well as demand deposits. And rate was the only thing we had. It was a trigger. Asset liability committee would meet, and we would address the rates accordingly. We need more money, bump up the rate. We don't need as much, turn it down, let some of it run off, right? We had money running off intentionally. We're entering that again, but the thing is, we've conditioned consumers to price based upon rate or location, and not on what am I doing to help you make the most of your money or live well within your money. I still think that needs to be part of it. Pricing is always going to be consideration. I buy a car because of the features of the car, but at the end of the day, I have to afford it, and it's got to be within a price. And I'm going to shop the dealer, even though I know I want to buy a Ford. I'm going to shop various dealers. Now, they're moving toward fixed pricing. That'll probably change a little, but I'll be looking at the service they provide and the extended warranties they provide. You cannot compete on price alone.
Yeah, 100%. Because
and I'm with you. The messaging, the messaging sometimes is lipstick on a pig. And I was in the advertising part of the business when I left. When I left Affinity in 2004 until 2009, I worked for a very well-respected brand agency, and we would tell those clients, mostly credit unions, we can put a messaging strategy around you. We can show you how you could be different from a look and feel perspective, but we cannot get you to act different. And if you don't act different and create product and service that's different, it's, again, lipstick on a pig. It's a broken promise, and that will not carry you long. The look and the feel of your brand gives you a new look and a feel and a little attention, but it doesn't last very long. Back that promise up with action. Truly differentiate by doing things differently.
Yeah, one of my clients, your marketing company, I don't know if you know Bo McDonald.
Oh, I know. Yeah,
awesome guy. They feel out the potential client as much as the client is getting to know them, and I know they've turned some away because they can't. That's how we did it. Rouse and Partners. Change. We can't market that you've got great services or whatever if you can't do a HELOC in less than 6 weeks. That's not going to help. It's just going to back you up more. You need to fix that system before we actually turn on the marketing faucet at all. So yeah, there's a lot of behind the scenes stuff that's less sexy, I think, especially. But that's the fun stuff. That's the fun stuff. It's like sitting down with a CEO and saying, how can we help you be different? Right? What is your strategic vision for the brand? Where do you want the company to go? Let's talk about your finances, because there's always going to be financial objectives and membership growth objectives. But let's find a way to really roll up our sleeves and perform and act differently. And that flows right down to the staff, to the front office, the back office. The back office or the front office is held hostage to the back office often because of the chore associated with banking. We've always done it that way. Or your technology partner, again, is out of sync with where you want to go from a delivery perspective, because they're antiquated or have, an old platform that just doesn't offer the flexibility it needs to build a better experience.
But you cannot build a brand in today's market unless you behave and act differently. And for banks, the best way to do it is ask themselves, how can we remove the chore of banking? If I'm in the front office, I expect the back office to cooperate more to make it easier for me to service that member and provide a better experience to them. And you look at the bigger banks like Chase, that's what they're doing. I spent 2 hours yesterday talking to 2 branch employees at a Chase. Once they knew about what I did for a living, they were not just interested in what I was willing to bring to them as bankers. They were like, well, tell us how you envision differentiation. And I compared what we were talking about at Core States in Philly in the 1980s with what they're delivering today at a physical branch. And it was amazing to see that they're actually doing some of the stuff that we talked about almost 40 years ago.
Yeah.
But it's taken too long for this industry to evolve. And it's exciting that the neobanks and the fintechs and technology and even, again, kind of the positive side of the pandemic, digital is evolving to the point it's like, we get it. We realize that we have to rely on technology more to deliver our products. But the technology in itself won't do it unless you've got the drive, the vision, and you understand that you've got to leverage the insights and the data to turn the ship around and actually produce an experience that people are willing to talk about and are excited about. And sometimes the best experience is one I never have to think about. The bank I want to have, or the credit union I want to have, is one I never think about. Because when I think of my bank or credit union, I don't have something good to say. It means there was a problem.
Yeah, well, and it's all hitting at the same time that we're having, like, all the baby boomers are starting to retire. So we're getting entirely,
Guilty as charged. I just hit 61.
Yeah, so there's a turnover in talent as well. So kind of as a wrap up, how do you think all those things are going to converge together over the next 5-10 years?
Well, personally, I'm looking forward to retirement, but like I said at the beginning of this discussion, I don't know if I ever will. I hope that Gen X and Gen Z, because I think they grew up in kind of a more technology first kind of environment, they will look at things a little differently. There will always be an evolution to the financial services industry. I do think the evolution is picking up speed. I think globalization has helped with that. I'm obviously worried about the geopolitical situation and kind of the baggage that comes with all the negativity that we have in our society today as a whole. We're becoming increasingly polarized. I think that the bank of the future will still be a bank and/or credit union. I think the prognosis for credit unions is really good if they can better tell that story that you mentioned before. They've got to showcase their point of difference. They've got to tell the success stories, but they also have to be reasonable in the expectations.
Yes.
I think the evolution is going to be positive. I think boomers, there's a lot of wealth in the boomer segment, obviously. I don't know if credit unions and banks will benefit directly from them. Obviously, the loans aren't going to be coming from that market segment in the future. But I think that the QSOs out there that are involved in financial investment advisory services, they're the ones that can probably step up their game and maintain relevance. Mm-hmm. The interest rate market right now is at the point that boomers need fixed income, and I'm starting to I'm getting 3.25 or 3.20 right now for Betterment. I'm not seeing a lot of great, and that's on a money market. Actually, it's on a cash account. It's not even a money market. I can pull out as much money as I want. I use that just to throttle money, move money around, rather than earning practically nothing at Atlantic Union and checking. I just move money around. I make money on it. I'm losing to inflation. So I think that the credit unions need to kind of take that into consideration, because there is going to be a lot of fixed income needs for the boomers. We can't rely on Social Security. No one should. It's really going to be a problem for your generation and the generation following.
Not going to get anything.
Yeah, you're at least 15. What are you? 15 years younger than I am, or so.
I'm 46. Yeah,
you're 46. There you go. 15 years, right on the money. So, but it's a good challenge. I've not had a lot of people talk about what do we do about the boomers recently. The boomers they've gotten a bad rap. They're apparently to blame for a lot of the ills of our society right now, which I think is BS.
Well, you weren't raised by a boomer, so
I was, yeah, my parents were Depression era. You know, my father was what I would call the millionaire next door. You know, he was very conservative. He kept his finances to himself, and he accumulated. Never did a loan, never did a mortgage. He built his own home, his first house. That's how he developed equity. And a lot of my friends that are my age had parents that are very similar, older parents. So that mindset maybe we'll see that maybe in some of the Gen Z, because they came out of, the last financial crisis.
No, yeah, but you can't. The financial reality is you can't not have a mortgage or a student loan or a car.
These days you can't. Yeah,
the
you can't.
costs have gone ridiculously, and yeah, that's one of the things I think my parents don't understand about how it is to live now, because my dad was going to grad school working part-time, my mom was working full-time before they had me, and it was just you were able to afford college at that point and work and do it, but yeah, so
times have changed. Yeah, that's a very good point. My parents could afford to put money aside for my college education. They could afford a good neighborhoods and a good community.
Defined benefits plans.
Yeah, and my dad worked for AT&T, and on the manufacturing side, he was a technologist, and was well paid and well educated. So it was, and my mom didn't have to work. She did to put him through college after he graduated, after he was involved in or got in on the GI Bill. But yeah, so the dynamics of society as a whole have definitely changed. But yeah, we have a lot of problems we have to address. And again, getting back to the conversation, kind of wrapping this up, credit unions and executives need to look more holistically at what's going on and ask, how do we fit in? And how can we, again, make people feel truly that we're advocating for them? And also be honest with the challenges that they face. Because in many cases, those credit union CEOs and marketers face the exact same challenges. We're in this together. We've got to solve these problems together. And that includes the vendors. The vendors got to roll up their sleeves, get a lot more creative in helping these financial institutions survive and, more importantly, thrive. And the ones that do that, they will benefit.
And I really like the way you put it earlier about the business partners being true business partners.
Yeah. I hate the term vendor. Someone called me up the other day and said, "Hey, we'd like to talk to you about your vendor policy." I'm like, we don't have any. We're not a vendor. Click.
Awesome. Well, thanks so much, Bryan, for joining. Appreciate it.
Always a pleasure. Always. Don't forget about, you're going to be editing my book. I am working on it.
I can't wait.